Hello and welcome to TA for Traders. It's Monday the 30th of October. In this video we're going to look at the charts on the foreign currency pair, the euro and the British pound. Now neither are popular at the moment. On the euro we've got them easing their quantitative easing from January. And on the pound, we've got problems over, obviously, the Brexit negotiations, both negative for the currencies. Overall, looking at the charts, it looks like that euro weakness will continue. Let's look at those charts. And here we are on the weekly, so each candle represents 1 week, and you can see that the euro strength that we saw through the summer has now diminished, and we've had a big fall. We've fallen below the support of the 20-week moving average. It did give some support, but now we're having the second week or even third week trading below that average, and we would now expect that to start to roll in the next week or two. You can still see that the 50 week is still moving up. That's 87.16 and is a medium term support level. If we actually get down there and consolidate, you can see that then the trouble doesn't go away. We've then got a potential head and shoulder formation with the left shoulder, head, right shoulder. So it does look quite bearish on the euro. Looking at momentum, you can see that the strong momentum we had through the summer has collapsed. We've now got negative momentum. RSI is below 50 at 49.26, and the MACD confirmed this pattern of negative momentum with a short term tracking down below the longer term, although they are still marginally above zero. But another week or two of a consolidation or downward move and they will be below zero as well. On the daily, again you can see that we've fallen through the support of the 20 average. You can see that at the end of the 10 days ago, the 50 created resistance as it's tracking down. Although the 20 is moving up at the moment, that will start to roll. If that rolls and the 50 come together, that would be a very bearish sign for the euro. You can see support down at the 87.60ish level, with the 200-day 87.55 as well. Again, we're showing negative momentum. The RSI back below 50 and in a downtrend, presently at 42.14, and the MACD are back below zero. The short term just moving away from the longer term divergence there, which is shouting a sell. Moving on to the 4 hour, and here the moving average is all quite negative. We've just had this morning a bearish cross of the 20 crossing the 200. Above there the 50 is also moving down, so eventually that will cross the 200 as well. Again, we've got negative momentum, the RSI down at 38.33 and the MACD as well. Perhaps we're starting to see the early signs of flattening on the RSI. That could indicate maybe a short-term bounce, but that will find resistance at 88.77 very quickly and would soon peter out. But there's slight sign there that the RSI might just be bottoming, so we might just be get a short-term uptick just for 2 or 3 4-hour periods, but that could be used as a selling opportunity. Looking at the support and resistance levels, 20 days the first resistance 89.15, then 89.75 from the 50 day, with support from the 27th of October low 88.261 and then that 200-day 87.55. Thanks for watching this video on the Euro GBP. The key conclusion should be that we expect Euro weakness to continue. The shorter moving average are nearly all negative. Downside momentum is prominent. Supports will be tested, and the longer term support is below 86. Thanks for watching this video. I hope you found it of interest. If you're a new viewer to TA for Traders, please do subscribe, hit that button. You then get email updates when I come out with new videos. I don't just cover the foreign currency markets, I also do videos on commodities, equity indices, and on single stocks in the UK and the US. Thanks for watching again. Please remember these videos are for information only and they're my opinion. They're not meant as an investment recommendation. I've done a disclaimer which I'll show you at the end of the video. Please do read it. It explains the whole situation. Thank you.